Welcome to this tax mock test. This question is called Hyperion. Please attempt this question yourself first, mark yourself strictly to the suggested solution, and identify all the areas where you went wrong so that you can fix it before going into the test. Don't watch this video if you've not yet attempted the question, otherwise you'll spoil it. Please do the question yourself first.
So this question consists of three related parts, part A, B, and C. So part A, Hyperion Pty Limited, so it's a company. Hyperion is a South African company with a December year end. South African company tells you it's a resident. Remember, that's our default, so if they don't say anything, we will assume that it's a South African company unless there's something that indicates obviously otherwise. December year end, right, so from the 1st of January until the 31st of December. The company was founded 6 years ago by 5 friends who had all studied electronic engineering. Hyperion manufactures a variety of electronic products like computer screens and keyboards. This is a process that is classified as a process of manufacture by SARS. Okay, so a couple of important things. Process of manufacture by SARS, that's the indication. That should be indicated to you in a question usually. If it's not, look at what they are telling you. If they use words like manufactures, then we will assume that it means a process of manufacture. Again, unless something indicates otherwise. Right, but there should be some indication. Why is this important for you? It gives you, first of all, it gives you an indication of what this company does. Because for everything that you do in CTA, and obviously in life as a professional, you need to understand what is happening in a company. How does it work? What's it doing? How does it make its money? Where does its expenses lie? What's its plans for the future? Anything that you can take from that is important. Okay, so this company manufactures and it does things like computers and screens and keyboards. So you can see it's everything to do with electronic, like computers, those type of things. Okay. Now, that's important also because you need to know what is the trading stock in case they do something with trading stock. Because remember, there's that section, paragraph JA of the gross income definition that says if you sell something which is similar to the stock that you have, so it's basically the same as the stock. In other words, if this company has a computer and let's say they convert it into a capital asset, so they take it out of trading stock and they start using it as a capital asset. If they sell that, it's not capital in nature. It must be included in gross income per paragraph JA. Remember that section. Okay, it pops up. You've seen it pop up in this question also. So watch out for it. It's popular. Most students miss it. Okay, so process of manufacture by SARS. Hyperion is a registered category B VAT vendor. In general, Hyperion purchases from other registered VAT vendors and retains the invoices or documentation. Again, for all time's sake, if you go and you purchase something, the total cost including VAT is what you will pay for it. Now, if you are a VAT vendor, you can claim back input tax, 15,000 rands. So this amount here is used for income tax, and that is section 23 capital C. So we will use 100,000 rands for income tax. If you go and you purchase something and you can't claim the VAT because you're not a vendor, or you didn't buy it from a vendor and it's not second-hand goods, or you are using it for exempt purposes, or input tax is denied, like for a motor car or entertainment, then the amount that you'll use for income tax is the amount including VAT. So this is a principle that you need to be aware of. So when you see a comment like something in the line of this, they purchase from other registered VAT vendors, they try to tell you that usually this company is able to claim input tax. Right? And then they say they keep the retained and necessary information, documentation. They are not classified as a small business corporation. All amounts below exclude VAT. What is the amount that we are going to use for income tax? The amount there at the bottom, 100,000 rands, if you can claim the VAT. Right? 100,000 rands, if you can claim the VAT. If you can't claim the VAT, it's the amount including VAT that you use. Okay, so they are telling us that they've already done the work for you. They've already given you this in most instances. Important though was, remember, unless it is stated or implied otherwise by the situation. So you need to still be aware of what they are saying. If they talk about amounts transferring in and out of bank accounts, for example, that's always an amount including VAT. Stop for a second and think what I'm saying there. Are you happy with that concept? The amount that moves in and out of the bank account, so what you would say debit bank or credit bank when you do journal entries, those are all amounts including VAT. Which amount's that? This amount here including VAT. Because think about it, if this is your bank account, you are a VAT vendor, you go to the store or you buy something online and you pay for it online, let's just do it like that. How much are you going to transfer? 115,000 rands. Then you are going to claim back 15,000 rands as input tax from SARS. So this is the net effect, this 100,000 rands, which is what you'll use for income tax. So, what is the amount moving in and out of the bank account? The amount including VAT. Okay, so be aware of stuff like that when they talk about if it's implied otherwise by the situation. The accounting department of Hyperion is currently completing the tax return for the 2019 year of assessment. The accountant has performed a partial calculation of the taxable income and arrived at an amount of 15,300,500. The accountant did not complete this calculation as she was uncertain about the treatment of the issues below. So then we have issue number 1. On the 1st of August 2019, that's in this tax year, Hyperion's management made a decision to remove a computer from the trading stock to use in their accounting department. So this is a situation where trading stock becomes property, plant and equipment, which is a capital asset. Now, general theory. This means capital asset is in our CGT net, trading stock is not in our CGT net. So what does this mean? It's usually a deemed disposal. So we dispose of it at market value, recoup that. We are then treated as if we bought it as a capital asset at its market value, and then we claim capital allowances. Remember that. That's the normal treatment. But if you make your own stock, which is the case here, and paragraph JA applies, that does not happen. Right, and that means you'll continue treating it like trading stock for tax. So you'll continue treating it like trading stock. So then they tell you the computer had been manufactured at the previous tax year at a cost of 37,000, right? So that's its cost. The accountant treated the computer correctly in the calculation of opening stock. Okay, so remember they told us that they've already calculated some taxable income. They tell you that they've correctly included that amount. They tell you the accountant treated the computer correctly, but is uncertain what to do with the transfer to property, plant and equipment. On the 31st of December 2018, the market value of the computer was 41,000. This is opening stock. Now remember, opening stock we do on the lower of cost 37,000 or market value 41,000. So which one would you use? 37,000 rands. They also tell you that the accountant has done this correctly. Okay, so it's already included in there. So there's going to be no need to do anything strange here. That's just a bit of recap of theory. Then, on the 1st of August 2019, the computer had a market value of 40,000. Now, super important, make sure that you remember this. If we go from a situation where trading stock becomes PPE, and important, we do not manufacture it ourselves. So again, if we convert trading stock into plant, so capital, so trading stock becomes capital. When we do that and we don't make it ourselves, so for example, Incredible Connection buys computers from Hewlett Packard, HP, and then sells it. Incredible Connection does not make the computers themselves. Okay, so if Incredible Connection takes that computer from trading stock and starts using it as a capital asset, what you usually do, so this is just a recap from what I said earlier, you are treated as if you sold the trading stock at its market value of 40,000, and then you are treated as if you purchase it back as a capital asset at 40,000 rands. And if you buy a capital asset for 40,000 rands, what do you do with it? You claim wear and tear, or capital allowances rather, on it. So that's what you would do. There are examples of that also in your trading stock section, as well as in your CDT section, when we look at assets moving in and out of the CDT net. Okay, so please revise that if you can't remember what I'm saying there, or if it seems unfamiliar. But in this case, paragraph JA will apply, which means we continue treating it like trading stock. So on the 1st of August, we continue treating it like trading stock. So if it was opening stock and it was trading stock, and now we're still treating it as trading stock, it means we don't do anything with it on the 1st of August. Then at the end of the year, this is now the closing stock. Closing stock is the lower of cost, 37,000, or market value, which they give us here as being 35,000. So which one will we use? 35,000 rands. They then tell you over here, per interpretation note 47, computers have an expected useful life of 3 years. Now, why are they giving you that? Because of this possible treatment here. Now, hopefully you are, or everybody that does and makes this mistake is listening to this recording. If not, share it with people. The biggest problem, or share this advice, not the video or the content, obviously. The biggest problem with a question when they do this is students will think because they've given you that information, you must use it. So then they completely ignore what they've done before and they just use it. Now, I have set exam questions for universities in the past, and that's why it's in here, I love doing this. And in the exam, I'm not joking, I will catch at least 70% of the students out just by adding this irrelevant information here. Well, not irrelevant information, just information to throw you a little bit off track and to make you question yourself. You have studied the work. I, or any examiner, cannot change the act. So if you know what the act tells you to do, and they give you this information, don't go, oh no, if they give me that information, now I need to ignore what I know and do what they're giving me here. No, that's not how it works. Apply the act. It's a trick. It's a way to test you. This information that you see here will be available to you when you are out there doing this work. So it will be, how are you going to know then what to do then? Plus, you're going to have people come to you, including your clients and your partners and your employees, whoever, and they're going to question you and they're going to say, no, but surely it's a capital in nature. How are you going to back yourself? Same way as you're going to do in the exam, by knowing your stuff, your work, and applying it. Okay, saying this is why this is irrelevant, and this is why this is irrelevant, and this is why this is not irrelevant. That's the whole point of being a professional, that you're not just a person that follows paint by numbers and things like that. Anyway, now that we move on to issue 2. Issue 2. On the 14th of September 2019, Hyperion made a decision to donate 20 computers to Incredible Connection, a popular retailer of computer equipment. Okay, so remember now, when you take assets out of trading stock, section 22.8 applies. That's what even applied here to this discussion we had about transferring it from trading stock to PPE. Section 22.8 applies, and that section always says if you remove it from trading stock, you must recoup the market value, except if, exceptions guys, if it's private use by a sole proprietor. So if I run my own little shop, but I don't have a company, so I'm running it as, it's just me, Rulon, selling things. If I take things from private use there, I will recoup cost. And if it's a donation to a PBO, you'll basically also recoup the cost. It's usually actually recoup whatever you deducted, but which is 99% of the time the cost. I don't want to just tell you that as a rule. Okay, but you can almost go with it. So deducted. So this is what you should do. Now this is, in this case, if you look at this is a donation to Incredible Connection. It's not a donation to a public benefit organization, it's a retailer. So already we are going to know that we're going to have to recoup market value. See our theory, we just fall back to our theory. Incredible Connection agreed that they would use the computers at their pay points in the stores and that the computers would be display Hyperion's name as advertising. Nice! So they're going to use this as advertising. Now section 22.8 basically also says to you, in one of its provisos, that if you are removing an asset or trading stock from trading stock like we've done here, but you are still using it in the production of income, you can treat that as if it's a cost incurred. So I'm going to say treat it as a marketing cost incurred. Section 11A. So you can claim that recoupment back. So the computers were manufactured at a cost of 25,000 rands per computer and they had a market value of 30,000 rands on the 14th of September. Right, so this is what we're going to recoup. The accountant has not included these computers in any form in the calculation of taxable income. Okay, so we have to do all the work here still. Lazy accountant. So this is a section 11A manufacturing cost that you're going to be claiming, and this over here is section 22.8 plus section 11A. Okay, so what do I mean there? We'll claim the cost of the manufacturing, then we will recoup the market value, and then in terms of the proviso in section 22.8, we will treat that same recoupment amount as a cost incurred. So it'll look something like this. I'm just going to do it very shorthand here. And just for one computer. 25,000 rands is a deduction. We'll then recoup, so this is the manufacture cost. We will then recoup section 22.8, and then we will claim under section 11A the same 30,000 rands. Why? Because we're going to use these computers as marketing. Now what's the net effect here? Just to show you what the idea is here, is a 25,000 rands deduction, which is equal to the cost. Now think about it. If you originally just went out from the start and bought the computers not for trading stock, you bought it in order to use it as marketing in some form, you would have claimed a deduction for the cost. That's what you end up doing here. So that's why it works out like that. Right. Issue 3, on the 1st of August 2018, make sure you see there, that is the 2018 tax year, Hyperion entered into a contract with Block Rent Limited to lease a property situated in the south of Johannesburg. The property contains an office building which Hyperion started using as the new head office from the 1st of August 2018. So from this date, they started using this land. Okay, so whenever we see these rental agreements, I want you to pay close attention to that. If it's just a vacant piece of land that they're renting and they can't use it until they've completed their leasehold improvement, you can't claim these deductions. They are not in the production of income. If it's a brand new trade, you could classify it as pre-trade expenditure, but if it's not a new trade, it's just cost that you've incurred and you can't claim because you're not in the production of income. So be on the lookout for it. So why is this important? The fact that there is already an office there which they are using means they can claim the deductions from day one. Right, the building, so they say it's a new head office. The building at a cost to Block Rent. Who's Block Rent? Block Rent is the property company we're renting from, of 4 million rands in 2010 when it was erected. So what are we going to do with that, guys? Nothing. Why did I put it in? Because those are the type of things that makes you question your knowledge. And that is what I want you to learn to start ignoring. Stick to your knowledge. Right. In terms of the lease agreement, the lease will be for 19 years. There will be a monthly rental of 250,000 rands. Nice. Section 11A. From the 1st of August 2018. Hyperion had to pay a lease premium of 1.5 million rands on the 1st of August. Section 11F. While I'm just talking about this, does anybody else also struggle? But if you want to write section 11F, I want to make that first, well, I actually did it properly now, but I always want to do this first bracket strange because of the F. Right, a little bit of a study into Ruan's psyche. So they will claim section 11F. And Hyperion had to erect a factory at a property at a cost of 4 million rands. Okay, so this is section 11G at a cost of 4 million rands. The factory was completed on the 1st of May and brought into use on the same day. That's in the 2019 year. The total cost of the factory was 4.5 million. Okay, so let's sketch this out. So this is the 1st of January 2018. This is the 31st of December 2018 / the 1st of January 2019. This over here is the 31st of December 2019. Okay, now this lease was entered into on the 1st of August 2018 and it went until the 1st of May, so basically 30 April 2019 when we completed it. Okay, so August, September, October, November, December, January, February, March, April. 9 months. Okay, now what is important here? Our tax year that we are looking at runs for this period of time. So first, a couple of things here. All of these amounts, this 250,000 rands here, will be 250,000 rands times how many months? How many months did we have from the pay from the 1st of April until the 1st of December? We entered into it years. Already we were paying here. So guys, we did this for 12 months. The lease premium, the section 11F, we're going to do it over 12 over 12 for the full year. But the leasehold improvement is a bit of a different story. The leasehold improvement is only here from / the 1st of May. So 1st of May until the 31st of December. So January, February, March and April have passed. So this is for 8 months. So this leasehold improvement here, we will do 8 over 12. Okay, and 9 months have expired. Now remember, when we do the leasehold improvement, we have to take into account what is the period of the lease, total period is 19 years, less the period to complete, which is 1 August to 30 April. That's 9 months. Leaves us with 18 years plus 3 months period remaining. Now remember, we are going to calculate the leasehold improvement over that period. This 4.5 million rands over here is, we could only spend 4 million rands, we spent 4.5 million rands, so we'll claim the excess there under section 13.